Hi, we're back with another early global view on Thursday, September 24th, 2015. It's currently 7:45 a.m. U.S. Central Time, a bit later than usual because we wanted to see the U.S. durable goods orders, which is the last of the really important data prior to, Friday's GDP in the U.S., but that also is a revision of a revision, so maybe not so important. The ultimate intense influence will come actually once the markets are closed today with a speech from Janet Yellen on inflation dynamics and monetary policy. So this is not just some odd thing. This is going to be a real influence, and we will, of course, be keeping an eye on that and following up tomorrow. But for now, it's on to the other macro influences as we see them. So the question becomes what all this means to the markets. And the answer is that they are off this morning. The December S&P is sitting down here at just about 1912.5, and that is off 16 on the day. And we just think the generally weak tendencies, including the fact, Europe's been under pressure because of that Volkswagen emissions test cheating scandal. And they just announced this morning that they have found that this is not just in the U.S., but this is also in Europe as well. So that goes from bad to worse, and it is affecting the DAX over in Germany. And that may be spilling over here, but nonetheless, we had pointed out that one of the key levels in the U.S. was the 1920 interim support after the market went through the 1930 area. As you can see, 1930 area interim support on the daily chart for December. The bigger continuation level was in fact down into 1920 or so, which had held with some modest slippage going back over the last couple days. Now below it, the far bigger support becomes 1900, and that has, a tolerance down to 1895 or so. Much below that, you're looking at mid to low 1800s, and we'll see how important that is on the intermediate term charts. But the other thing we note is that on the stabilization for the last couple of days, the hourly MACD still never recovered back above the lower runaway band. And of course, this still leaves the momentum with the bears for now. And that pretty much does it for the short-term view of the S&P 500.